Hey everybody, Smart Silver Stacker here. Today is Friday, September 23rd, 2022, and at the time I'm recording this video, the price of silver is coming under some significant pressure. Silver's back down under 19 bucks. At the time I'm recording this, it's down about 3.8%. And it's not just silver. Stocks across the board are selling off in a big way. There is a lot of red on Wall Street. All of the major stock indexes down at least 2%. The Russell 2000 down 3.5%. Crude oil now is down almost 6% on the day, back down under 80 bucks a barrel. And gold and Bitcoin are also in the red. So pretty much everything selling off in a pretty significant way. So could this be the big crash that we have all been waiting for? Well, you know, the yield on a 10-year treasury has been creeping up over the past several days. It's slightly in the red at the moment, but it still remains elevated at 3.68%. And that is indicative of some potential trouble in the bond market. And if that occurs, you know, the debt market is a real point of weakness for the economy. And I believe that is where the next major crisis might start. So that's something we definitely want to keep an eye on. And all of this has been brought on by the Fed's hawkishness at the Federal Open Market Committee meeting that we had earlier this week, where the Fed announced a 75 basis point rate hike to the federal funds rate. And I'd like to read an excerpt for you from the Federal Reserve's FOMC press release. Inflation remains elevated, reflecting supply and demand imbalances related to the pandemic, higher food and energy prices, and broader price pressures. The committee decided to raise the target range for the federal funds rate to 3 to 3.25% and anticipates that ongoing increases in the target range will be appropriate. In addition, the committee will continue reducing its holdings of Treasury securities and agency debt and agency mortgage-backed securities as described in the plans for reducing the size of the Federal Reserve's balance sheet that were issued in May. The committee is strongly committed to returning inflation to its 2% objective. Okay, so the Fed's getting hawkish and they're fighting inflation, but the reality is these rate hikes are not aggressive enough to get inflation under control. Even after this recent rate hike, we still have negative real rates, nearly negative 5%, because even with a federal funds rate at 3.25%, we still have year-over-year inflation of more than 8%. So that is a negative real interest rate, and that's just not going to cut it when it comes to fighting inflation. However, what these rate cuts are aggressive enough to do is crash the economy and crash the markets, which are so addicted to easy money. Let's take a look at this chart of the federal funds rate from the St. Louis Fed. Now, the latest data on here is from August, with the rate still just over 2%. And as you know, the rate has now been lifted to 3 to 3.25%. And if we go back on this chart, in order to find a time when the federal funds rate was above 3%, the last time rates were this high was back in January of 2008. Now, I'd like to draw your attention to this chart as well. This is the U.S. national debt. And if we go back to Q1 2008, you can see that the national debt was just under $9.5 trillion. Compare that to today's number, which is more than 3 times higher at $30.5 trillion. And let me tell you, having interest rates over 3% is a lot different when you have $30.5 trillion in debt compared to when you have $9.5 trillion in debt. And most of this debt is in the form of short-term treasuries that have to be rolled over quite frequently. So the debt service on this gigantic national debt is going to begin getting quite onerous very soon. So much so that it is not going to take much more in terms of rate hikes before the interest on this national debt becomes the biggest expense on the federal budget. And that's only the government debt. Don't forget the tremendous amount of debt owed by households, individuals, corporations, and businesses. And we are beginning to see just how unsustainable these interest rate hikes are today with the serious sell-off across asset classes. Now, the Fed has certainly been talking a tough game so far, but when this market really turns around, when it really crashes, and we enter into this recession/depression in earnest, and businesses begin laying off employees and 401ks are tanking, all while inflation remains stubbornly high, how much pressure do you think is going to be brought on the Fed by politicians? to give the economy a fresh hit of easy money, to buy treasuries, to suppress interest rates, and to try to kick the can down the road a little bit longer. If you're not sure, the answer is a tremendous amount of pressure. We may even see the current Fed Chair Jerome Powell used as a scapegoat if it is convenient, and will likely get a nice dovish replacement who will do what they are told. Now, how bad could this sell-off that we're seeing today get? Well, if we keep seeing the rates on US Treasuries moving steadily higher, it could get pretty nasty. But here's the thing, the worse it gets, the greater the odds are of the Fed ultimately reversing policy. And at this point, I view that as the ultimate inevitable outcome of all of this. And when those printing presses ramp back up, they're going to be printing currency like we have never seen before. And that's why I view today's pullback as an opportunity to acquire those assets that will benefit from the wanton printing of fiat dollars, specifically physical gold and physical silver. Now, could the precious metals drop more before this is all over? Sure. They might spike down, so I'll be keeping some powder dry just in case, but at today's prices, precious metals, and especially silver, represent a tremendous opportunity. And I do believe that the downside in physical silver bullion is somewhat limited, because if we see a spike down in the paper price of the metals, premiums on physical bullion products will likely spike to the upside. So that's why I'm still stacking silver. Of course, none of this is financial advice. I am just sharing with you what I am doing and my thoughts on things. So let me know what you think in the comments down below. Is this the big market crash that we have been waiting for, or do you think that we still have some time to go before this thing falls apart? Thanks for watching, everybody. Stay safe and happy stacking, and I will catch you next time. Smart Silver Stacker, out.